Hi, Diana Sescalini here, and we're going to be talking about Chapter 2 for our tax planning class. And I'm going to park myself up in the corner so I can talk about gross income and exclusions. So let's get my little pointer up here, my laser pointer. Okay, so Chapter 2 is going to cover understanding gross income and the things that can be excluded from that. So gross income is any income from whatever source you have. And by the way, it isn't always about cash. It could be bartered items, non-cash items, okay? Things that people, you worked for something, you work for somebody and they gave you something physical in exchange for paying you. That's still considered gross income. And you need to take a look on the actual book. But most of our gross incomes comes from salaries and wages, 80% of it, as a matter of fact. So an employer has to send out a W-2 to you that will tell you how much you actually had, your taxable compensation. So this is just boxes that you'll find on a W-2 that the employer sends you. So we're not going to go over all of them. It depends. Tips would be important if that was the type of thing. Boxes 3 through 6 talks about the taxes that are being withheld. So different boxes on your W-2. Box will be important to you and maybe not important to you. It depends. Box 12, any various forms of compensation if you were given any of these things. There's codes. Box 13, 14, and 15. If 13, if you're in a retirement plan, 14 and 15. So there's different things that somebody could give you, okay, that's considered gross income. Now let's talk about things that can be excluded. Okay, you can exclude from your income any amount you receive for payment of medical care or payment for a loss or use. So any monies you got from an insurance company can be excluded. Premiums paid by the employer for your medical care are excluded from your income. Excluded means you don't count them. Meals and lodgings. It depends. They're usually excluded if these tests are met. They're provided by the employer on premises during working hours. And lodging is provided by the employer on premises and is accepted as a requirement for employment. So now the employer can actually deduct some of these things on their taxes, but only 50% of them. But if an employer is giving you meals and lodging, it is not your gross wages. Here's some more things we need to talk about. Flex spending accounts. An employer sponsor allows you to put money aside, pre-tax money for various expenses. These are usually exempt, okay? However, you do have to pay tax on it when you actually use it. And it is a use or lose provision. But it can definitely reduce your taxable earnings. Okay, next we're going to look at some more fringe benefits. These are all fringe benefits that can be excluded from your gross income. And you can look at them at your own leisure. Okay, prizes and awards are taxable income. If you win any prizes on a TV show, you do have to claim it as gross income, with one exception. You're giving a person, you receive something for recognition of length of service or safety achievement. These are the only excludable ones. Okay, $400 on that. So let's take a look here. An employee of Statuaries receives a clock for 20 years of service. The clock is valued at $1,500. The award is not considered a qualified plan award. How much is excluded from his gross income? Only $400. In other words, the other $1,100 needs to be considered as taxable income. Okay. So I'm going to stop here. This is going to be video number 1. Video number 2 will start up in chapter 2 with annuities. We'll see you on the next video.